Hello everyone, welcome back to our channel Part-Time IT Investor. I hope you had a very good long weekend. आज के दिन है Sunday. So guys, what I thought that since you have long weekend, I will create one learning video and a strategy which I'm still exploring and getting so far based upon the back simulation. Okay, back data simulation, it is giving good results. Okay, so let's quickly start with it. All right. So before we move to our strategy, guys, okay, if you are new to our channel, please don't forget to like, subscribe, and comment. This is our channel logo. Okay, so let's start with that. Okay, so guys, the main intention, okay, of creating the strategies and trying to automate the trade, okay, as you already know that I'm not sitting full time in front of the screen. Okay, and second thing is to try to achieve the good trades of successful trader. Okay, because as you can see, the what are the good traits? Patience, discipline. Okay, patience means you need to wait for the right moment to enter your trade and to exit your trade. Discipline, you need to trade to you need to stick to your trade plan. The analytical skills, you need to learn, either you learn the candlestick pattern or price action pattern. Okay, or many other studies are there in the stock market available. Okay, or option trading strategy. Risk management. Either you buy the hedge in options, okay, or you put up a stop loss. So there are different type of risk management strategy in order to save your capital as well as profit. Adaptability. So adaptability means that we need to adapt to the market situation and condition. For example, I think a couple of months ago we have been into the war with India-Pakistan war. Stock market was going up and suddenly it came down. Okay, if you are trader, if you are still sticking to your trade plan of being bearish or being bullish, so you will blow your account. But if you're investor and you're still say you will exit all your stock portfolio, then again you will be at loss. But this opportunity, okay, what adaptability means, okay, I will be utilizing this option, this opportunity, okay, to buy the stocks at low level. Okay, that's what I will do as an investor. If I'm a trader, I'm already at the bullish position and I saw that it is hitting my stop loss or everything in respect of my hedge option, I'll be exiting this because this something came into market which we were not prepared of plan. So this was out of syllabus. Okay, that's called adaptability. Okay, so main intention over here is guys to remove the emotions, okay, from our trade and investment decision and hand it over to the algorithm, so that they will allow us to make more profit. Because maximum time if you see that trade losses are due to the emotions only, because we know that we make some decision based upon emotion. So that's what we wanted to eliminate from our trading decisions and investment decision. All right. Okay, so let's understand what is the strategy. So VWAP is volume weighted average price. Okay, this is being utilized by many investor and traders to make a buy and sell decision. Okay, so what our strategy says? Our strategy says that it will be working on 50 minutes time frame, and it will position will be for the weekly, and exit plan will be simple stop loss, and profit plan will be to simply book the profit. Okay, based upon our target. So I'll be maintaining 1:2 risk to reward ratio over here. Okay, so if I wanted to take you to the trading view terminal, okay, so okay, so it's a very simple strategy, guys. I have already kept one option open, okay, 24,500 option open for 21st August. You can see, guys, okay, once this closing candle is above VWAP, it is bullish. It's below VWAP, it is bearish. Simple, no fancy terminology, nothing. Above VWAP, bullish. Below VWAP, bearish. That's it. Since I'm an option seller and DK will be in our favor, I'll be going to sell the CE call. Okay. Once it closes below the VWAP, you can see इसके नीचे गया, it goes below, it is bearish. It goes below, it is bearish. Okay, this is the market which we are going to capture for the C. Same thing we can do for the PE as well. Okay, because if the market is going up, okay, so PE will also start going down the VWAP if we are trying to make a strategy in the options. All right. So it's as simple as that, guys. Nothing fancy. Okay. Now let's go ahead quickly to the stake option, guys. Okay, so this streak option, guys, this is a free platform, okay, provided by Zerodha. Okay, so nothing paid version over here, guys. Okay, everything is free. we have enough sufficient material and tools available on the internet to trade it freely, study it freely. Okay, there is no need to have any paid version. Okay, let's quickly go ahead and create a strategy. Okay, so we are going to sell an CE option. Okay, so what we're going to sell, we're going to sell the CE option of Nifty. So I need to add the instrument over here. Okay, so it will be Nifty 50 indices. I will select this one. Okay, I will be done. Now I will select on Nifty 50, contact is CE. Okay, strike option, I will keep it as 4. Okay, and expire will be current, expire type will be weekly, order will be short. Okay, candle frequency will keep it as candle only. That's it, nothing fancy. Okay, we will keep the time frame 50 minutes because we wanted to trade it at the 50 minutes. Chart type is candlestick. You can select the Heikin as well, but I go ahead with the candlesticks. Okay, holding time is CNC NRML. Okay, which is weekly. Okay, if you select MIS, guys, it's for intraday. Okay, since we are not going to have an intraday strategy, I'm going to select the CNC and NRML, which is carry forward. Okay, lot, I'm going to select two lots. Okay, so if we're going to two lots, guys, as per Zerodha, will be requiring at least 4 lakhs margin. Okay, which you can further reduce it by hedging it against any of the further CE option call that we will also see. If we hedge it, that will get reduced to 1.4 lakh. Okay, so we will see that on that as well. Okay, okay, so we will also go ahead with the next entry plan. So what will be our entry plan, guys? Okay, what we are saying that if the candle price closes below, what is candle price closes below, okay, uh, below the VWAP, okay, then we will sell the CE option. Okay, this is VWAP. Okay, uh, s- we have the strategy done, simple condition. Now we will go to the entry condition further option. I want this strategy to start at 9:30 because I don't want the early morning volatility. I want this strategy to stop around 2:30 p.m. Okay, so this is it. Okay, stop loss like I mentioned. Okay, I want it in terms of points. I will see 20 points and target profit will be 40 points. Okay, since we are selling two lots, guys, it will be 150 into 20. Okay, so 3000 loss. Okay, okay, guys. Okay, so basically, we will be having 3000 rupees loss. Okay, if we make profit, we'll be in 6000 rupees profit. That is 1 is to 2 risk to reward ratio. Okay, so if you see, guys, nothing fancy, simple stop loss, simple target. That's it. Okay, over here. So if I go to the initial capital, okay, let's start with Jan to March. Okay, so guys, on quarterly basis, I think this Streak platform provides the backtesting facility. So let's take the first 3 months. Okay, let's save it. Okay, let's rename it as VWAP option selling. All right, I'll save and let's see what will be the result. And boom. Okay, as you can see, guys, over here in 3 months. Okay, 3 months. Okay, we made a profit of 15,200 rupees. Okay, that is excluding the trading charges. If I add the trading charges, that is 45,000, almost 45,800 rupees. Okay, over the capital of 4 lakhs. If we simply do the option selling, okay, we simply do the option selling, that's what we are able to earn. Okay, but guys, like I mentioned, we can also hedge it as well as buy the further away option call to reduce the margin from 4 lakh to, okay, so buy, okay, let me see, okay, we need to buy another CE call further away, okay, which will reduce 4 lakh margin to 1.5 lakh margin. Okay, so in existing scenario, if we see, okay, we remove the trading charges and everything, okay, and 45,800 divided by 4 lakh rupees. Okay, so if you see, that is coming around 11.45%. Okay, return in 3 months. Okay, so that's very good return, guys. If you see this capital, and if we add the hedge, okay, over here, of course, we'll be losing some money in hedge, but that will be still good. So mean target, okay, an expectation which we should have, guys. Okay, since we are not a full-time trader or full-time trader, my main target is to at least achieve minimum 3% to 5% target, okay, on monthly basis. So guys, as my capital increases, okay, this 3% to 5% will be sufficient. Our strategy and trading plan should be accurate. Okay, now you will say, guys, that trading with 1.5 lakh capital, okay, and earning this, that is also still good, guys, because once you start increasing your capital, this amount will be significant. Okay, so now let's go ahead and quickly enter the profit over here. Okay, this is your profit. So we can see 44 45,800 positive. Okay, so this is done. Now let's go ahead and quickly check for the next 3 months. Okay, so March is then we will set April. Okay, so this is April. We will start from here. Okay, from 1st April to 26th June, now 29th June. Okay, so let's run it. Let's see. Boom. You can see, guys, we have earned 63,982 rupees. Okay, nothing else which we are doing, guys, over here. Okay, very simple strategy, very basic. Okay, we are still able to do it. Okay, after removing the trading charges, it's around 58,296 rupees. So if you further go into detail of this, guys, okay, if you see, we are having, okay, total 80 trades. Out of this 37 we have one. Okay, so 37 multiplied by, I think, for each two trades we'll be doing 6,000 rupees profit, but we have lost, okay, 43 multiplied by 3,000. So basically 1 is to 2 is to reward ratio, guys. That's why we are able to maintain the profitability. You can see the maximum loss over here is 3,000, maximum gain is 7,710. So this can be because, guys, okay, whenever we have spike, okay, in market, so in that case also it will not wait for that target, okay, to book. So that's why we will be getting some spikes at the lower side as well as the higher side, due to which we are seeing the average maximum gain on 7,710. Okay, and if you see over here, okay, average gain, okay, average gain per win trade is 5,215 rupees, and average loss is restricted to 3,000 rupees only. Okay, so the guys, this is the beauty, okay, of automating your trade and sticking it to the basics, nothing else. Okay, so now let's go ahead and quickly write it down, the profit 58,296. 5296. All right. Okay, good. So guys, you can see, guys, if we are trading on with 4 lakh capital, okay, so we have already made somewhere around how much it is coming, 1 lakh 3,000 rupees, okay, in 6 months. Okay, so that's a very good return. Okay, if we see on 4 lakhs capital, it's coming around 25%, guys. Okay, now let's see till from July onward till now, what will be the profit or loss. Okay, so let me go ahead and update the end date over here. Okay, so let me pull it to August 15th. Okay, and it will be June 29th. Okay, right, we will take it from 30th of June to over here. Okay, now let's check. Again, we can see we have been to profit of 40,777 rupees. If I remove the trading charges, that is 39,734 rupees. So let me add over here. So 39,700 rupees. So you can see guys, okay. So even if I stick to this plan, okay, and do the option selling, my loss is limited, my profit is also limited, but I will be removing the emotion out of it. Simple trading plan, nothing else, okay, over here. So let me go through this plan over here, okay. So transaction details, here we can see the transaction details. You can see on 13th of July we sold the call, okay, if the condition satisfied at 60 rupees, okay, and we booked the profit. Same thing over here, same thing over here, same thing over here. Okay, so here you can see, I think we have made a loss. 4th of July, 9:30, we sold the option of 70 rupees, okay, based upon our strategy, but it went against us at 225. We booked the loss at 90.75. That's absolutely fine, guys. On if you see on 5th and 6th, okay, what was our 5th and 6th July? If I check the calendar, okay, calendar, what was 5th and 6th July? 5th and 6th July was Saturday, Sunday. So the thing counts for it. Okay. Sorry, 5th and 6th July was Saturday, Sunday. Then 7th of July. Okay. We sold it and we exited on 10th of July. Okay. And if we go to 11th of July, then we exited at 14th of July. So I think we are really good. This strategy is working really good, guys. Okay. So this is the strategy, guys, which I have not yet deployed. I have other strategy which is deployed. I was making strategy too much complicated. So I said let's make it simple. Okay. So this is what I think the results over here. All right. Now let's update the strategy to add the hedge, guys. Okay, because we don't want to be in a position, okay, where market is gapped up by 600 points, 800 points. That can happen. Okay, let's say Russia-Ukraine war is stopped. Okay, or something good news or tariff is removed. This can happen. Okay, even Nifty has now capacity to open gap up somewhere around 300 to 350 points. Okay, so in order to hedge it, okay, so in that case, guys, the stop loss will not work for us. Okay, because next day if it opens gap up, then we will be already in loss. Okay, so in order to accommodate that, okay, what we will do, we will add a hedge over here. Okay, let's go to Nifty 50, done for it, and I will set the C option. I will further select the further away option as a hedge. So strike option which we have utilized is 4. So let me put 200 points away. So that will be around 8. Okay, it will be current, it will be weekly, it will be long. Okay, let me see this one, it's 8. Let me this one, it's 4. Okay, so 200 points away, guys, over here. Okay, and here the capital requirement will also get reduced to around 1.4 lakh, guys. Okay, so if I wanted to execute the same, okay, let's see. Sorry guys, I think आज का वीडियो काफी लंबा होगा, लेकिन this is what I, if you want to learn, there will not be any short videos. Of course it will be a long videos only. Okay, because I am trying to cover it in details. Okay guys, so as we can see, guys, if we are using hedge, okay, so we'll be losing, okay, around 24,000 profit to that, but that's absolutely fine for me, okay, because my profit will reduce over here from 13,700 to 15,000, almost reduced by I think 60% over here, but this will give me the hedging, guys. Okay, so I think somewhere around in May time frame, I think this happened, right? Big gap down. So if I want to put it over here, okay, so let me put it as slash, it will be around 15,000. Okay, if I go ahead with the hedge. Okay, we will go in reverse order, guys, now. Okay, so let me go ahead and check the change the date condition. Now it will be from April, right? 1st April to June now. Okay, now let's see. All right. So guys, this is not fully automated yet, because you will get a notification on your mobile if you want to execute the trade. There are ways to again fully automate it. For example, we don't need to do the notification as well. So that part I'm still exploring, guys. If I'm able to explore it, then I think we will see. Okay, I will try to put that video as well. If you want me to create a video upon the full automation of it, please do let me know in comments. So I will start working upon it in the next weekend. So guys, you see that in April, guys, we had a very big gap up and gap down. Okay, and if you see this one, that's how it will help us. If I go to this one over here, we need to find which was a day where our option, okay, opened very high. Okay, so this is a hedge which we have purchased. So we can see, okay, on 7th of April, okay, 7th of April on 125, I think we bought and it got sold at 165. So guys, any market fluctuation also will get covered over here. That's absolutely fine. And considering the current market condition and global geopolitical scenario, this is absolutely required for us. Okay, now let's go to 115, the thing over here. So here also I think one small profit booking. I think the month of May, I think this happened, right? Okay, you can see over here as well on 8th of April, guys. Okay, on 8th of April at 9:30, 8th of April 22 was there, and 8th of April at 12:30 it spiked up. Then I'm looking for a gap, guys. Okay, so basically next day it opened very gapped up or gap down. So that's what. Okay, here it is, guys. Okay, here it is. I got it. So if you see on 11th of April, okay, on 11th of April, okay, it gapped up. I think हमारी there's a India Pakistan war got stopped, okay, and suddenly if you see the 11th of April, what was 11th of April? 11th of April was Friday, okay here, okay. So this was Friday, okay. War got stopped, and war got stopped, and on 15th of April, okay, it gapped up. You see, if I would not have hedged it, okay, so this hedge has covered me. Let's go back to the other option, okay, of 11th of April and see what was the loss over there. Okay, so if I go over there and if we go to 11th of April, yes. So 11th of April, end of the day. Okay, 11th of April, end of the day. Okay, we this strategy exited from the position. You can see at 3. So I think it hit our stop loss, and that's what saved us over here. Let's say if it would not have hit us, okay, on the stop loss, okay, then this would have been big loss for us on 14th of April. Okay, so that's why we see this strategy works absolutely fine. Okay, if we hedge it. Okay, so that is hence proven, guys, over here. Okay, so I think okay, so if I wanted to go ahead, okay, with the trading charges, it is 59,000 in the month of this. So let me put it over here. So hedge saved us over here as well. Then it will be 59,000. All right. So it's the last one now, guys, with our hedge. Okay, let's go ahead and check from January to March. 1st January to March. Now let's see. Okay, okay, still running, still running. Okay. All right, minus 40,842 rupees. Okay, it's very bad. And if we see, I think it would, during that time market would have been very volatile. Okay, we are still in profit, guys. Okay, even the market was very volatile during the January month to March month, we still ended up in profit of 2,463 rupees over here. Okay, we can see. So if we go back to our chart, okay, so here in the Jan to March month, if we would not have hedge, okay, our strategy would have yielded us only 2,500 rupees. Okay, so this is the data, guys, which you have in front of us. Okay, so guys, it's so your state of mind. What is your risk appetite? Okay, and how much you are happy with your risk appetite. So for me, okay, with hedging, if I'm getting this profit, I'm also good because in that case I will be investing only 1.5 lakh rupees. Okay, That is absolutely fine for me. Considering the geopolitical scenario, okay, the market can open gap up, gap down, okay. So I will be maintaining the hedge strategy. But this is how I think we will do it. So it's a very basic strategy, guys. Okay, there are many parameters to it, which I'll be further adding at what gain point of time I want to start the strategy, at what gain point of time and to exit the strategy. Okay, this is purely based upon the stop loss and target profit. I can further add the exit condition based upon my knowledge. Okay, so this will further refine the strategy. So guys, if you are new to my channel, I think please don't forget to like, subscribe, and comment. And I think I will be covering how I will be also adding the exit condition in the strategy if it's successful. So please do keep tab on it and hit that subscribe button for the further updates. Okay, so I think that's it for today, guys. I hope you had a very good day today and a good profitable day tomorrow as well. Thank you very much. Have a good day. Bye.